So let's do one thing. We'll continue this IT discussion and talk with another company, Datamatics, which is the stock on our radar today. The stock movement has been relatively flat this year. In Q2, companies signed new businesses worth $29 million, which is about 50% more than Q1. Companies confident of maintaining a growth of 15% in the coming year. Rahul Kanodia, who is the VC and CEO of the company, is joining us now to discuss the business outlook and what's happening in the IT space in general as well. Mr. Kanodia, good afternoon. Thanks a lot for joining us. Well, we heard from HCL Tech today that yes, growth could be at the lower end of their guided band for FY23. What is your take? You have guided for a 15% growth rate in the year. Does that stay? Are you also seeing some sort of headwinds here?
No, we are not seeing any headwinds. As far as business is concerned, it remains robust, and I think we will stay with the 15% guidance. In fact, we're not seeing any slowdown in the new logo acquisition or customer new contracts. It's business as usual.
Okay, so in the last con call, you had said, and I quote, as explained in the last call also, we are maintaining our guidance for revenue growth at around 15% as of the moment because of many uncertain factors which are playing in the market. But having said that, it may grow beyond 15% levels as well. So two-part question, what would those uncertain factors be? Something that HCL Tech has spoken about as well? And if not, will you grow beyond 15% as well?
The uncertainty, as you see in the US and European markets, because of the war, because of the oil crisis and things like that, we do see softness in Europe. However, from a deal flow point of view, we're not seeing any slowdown. In the US also, you see Twitter and Facebook and Amazon all talking about reducing headcount, cutting people. We are not seeing that in terms of our business. So business-wise, we're not seeing an impact. But because of the nervousness in the market, with all these large companies trying to slow down, there is some degree of uncertainty which remains, but we don't see on the ground any impact in terms of business.
That is good.
In fact, even in India, we don't see that impact.
Okay, that is good to know. But is it impacting the negotiations around price increases at all? Because you had spoken about being in conversation with clients about that. The uncertainty, no impact on price increases. And have you been able to get your clients on board with higher prices?
Yeah, in fact, most of the clients we've been able to go back and renegotiate. Most of them have given a price hike. It ranges anywhere from 4 or 5% on the lower side to even as high as 20% on some of the higher ones. But most of the clients we've been able to renegotiate prices upwards.
Okay, so 5 to 6% is what you said. I beg your pardon?
So on the lower end, it has been 5 to 6% hike in pricing, and the higher end has gone up to 20-25% as well.
Oh, okay, 20 to 25% as well. So in
that's not across the board. That's you know.
Yes, of course. That depends on clients as well. So in that case, what would do you maintain your margin guidance as well? 15 to 16% EBITDA, EBIT percentage at 12 to 13%, or will you be able to do higher than that? If at all, price hikes are better than what you expected as well.
Well, the margins would remain as we had projected because with the price hike, your costs have also gone up. And that is eroding your margins. So on the one side, you get a better price. The rupee has weakened. That is helping us, but the cost has gone up as well. So we will retain the guidance that we've given earlier.
Okay. Mr. Kanodia, one of the big highlights for Q2 has been your deal wins. Your deal wins were at $29 million in Q2, which is 50% higher than Q1. Going into Q3, which is almost done actually, and Q4 as well, do you think you will be able to maintain that run rate? Will you be able to do better than that?
I think Q3 we will. Q3 is always slower because of Thanksgiving holidays, Christmas holidays. The industry tends to slow down. So Q3 is always slower than Q2. So we will maintain the same pattern. I don't think it will be higher than that, but it will be a similar cycle that we've experienced every year.
That is the same case for Q4?
Q4 we'll see a bounce back again. But again, Q4 is a little distance away. But yes, we'll see some bounce back compared to Q3. Q4 tends to be better.
Okay. So this is about the basic deal pipeline. But let's talk about your digital tech margins as well. Where do the margins stand there right now? Q2 margins improved marginally from negative 4.3% to a negative 2%. But this is a place where you are talking about betterment of margins as well. So did you see that improvement in Q3 and will that continue in Q4 as well?
Yeah, we do see improvement in Q3 as well. Although I'm not at liberty to give out the numbers, but yes, one does see an improvement, and we are tightening our belt on that. So therefore, the margins should improve.
So margins, when we talk about improvement, by when do you expect a break even when it comes to digital tech margins?
As I mentioned, we will certainly in this financial year break even. So we should, I will maintain that by March end, we should certainly be in the break even zone.
Okay. All right, Mr. Kanodia, it was a pleasure speaking with you. Thank you so much for joining us and answering all those questions. So that's the word coming from Datamatics.